Well, it's time to turn our attention over to the markets. Record highs in the cattle market have been a cause for celebration for many producers as of late. And what better place to get a breakdown of the cattle markets? We had the opportunity to sit down with University of Nebraska ag economist Elliott to get his take on this hot market. Elliott, you just addressed producers here at the Goodmanson Sandhills Laboratory. Give us a high-level overview on your presentation this morning and some of the key elements that you honed in on today.
Yeah, so really we were talking about the outlook for the cattle market, particularly as we go into the fall. A lot of decisions about weaning, retaining, and really kind of where prices could potentially go. We talked a little bit about kind of the markets, what the futures market is saying, what the local cash price here in Nebraska is saying, and then just talked about kind of how consumer demand is potentially supporting those prices. And we kind of ended with a little bit about kind of what we'd expect for, basically returns to cow and what are potentially that are able to support those.
Mm-hmm. Well, of course, herd rebuild is on everyone's mind right now. Talk about heifer retention, what those numbers are looking like, and how many heifers are headed to the feed yard.
Yeah, so really the short answer is we're at the lowest numbers that we've ever experienced, both at nominally, so like the actual number of cows, but also when you think about the total number of heifers to cows that we actually have out there. That number of heifers to cows really gives us a good indication of how much herd rebuilding is actually happening. It's low, lowest that it's ever been. And we see that show up in auction barn receipts. When we look at total receipts for national feeder cattle, we see, essentially heifers being still going to the sale barns and higher value out there for heifers than the retainer. And then we also see it up in the heifers on feed report that the USDA reports. So really along the supply chain, there's no indication that we're actually retaining and rebuilding. So when we talk about kind of what that means for prices, it means that, assuming constant demand, which we shouldn't take for granted, that, prices still have the ability to move upward.
Most definitely. Well, as we talk about demand, consumers are consuming more beef and also paying more for that beef. What does that tell us about what the market looks like moving forward?
Yeah, so demand, as we know, is just kind of a combination of prices and quantities. So when we think about kind of what consumers are willing to pay, prices were up about 14% last year, and consumption didn't even change, which means total value through the supply chain was able to be supported. When we look at this year into quarter two, we're at essentially about 15% higher demand than we were back in the early 2000s. Really, the quarter two of this last year for demand and really quarter one was the highest that we've ever seen. So I don't think we should take that for granted. We have strong cattle prices. We have a supply situation that's favorable. But even those situations, consumers can choose to walk away from the beef counter and purchase other products. They haven't done so, and there's really no indication of them doing that in the future.
Well, through this, what have we learned about today's consumer? You mentioned in your talk earlier today that we've kind of established a new normal when it comes to consumer preferences.
Yeah.
What does that mean, and what can we expect for them? Are they still going to continue to pay these high prices?
Yeah, so I think we're kind of in a feeling out phase if we can actually move into a new normal. The fact that we're seeing high prices and consumers have really unchanged consumption habits is really kind of a new phenomena that we're seeing. We had essentially kind of three primary phases for beef demand over the last 25 years. In the early 2000s, we were consuming a lot of product, but at low prices. And then really after the Atkins 2007, we went through a kind of 3-year transition phase where consumers ate a little bit less beef, but we purchased it at a lot higher prices. And now we're actually starting to move back the opposite, or at least up. We're starting to either consume a little bit more or just the amount, but at higher prices. So maybe move to the left and up now. It's really kind of a potentially for a new frontier for if we're able to actually extract more value and actually not change consumption patterns.
When we talk about trade, you mentioned some other markets, in particular Brazil, who may also be capitalizing on a record corn crop this year. What are some considerations? You mentioned maybe not this year we need to be so worried about it, but some infrastructure pieces that may be laying the foundation for right now.
Yeah, so really what I think about when we talk about all the tariffs and happening, we've seen kind of China back off the beef market. We're selling high value product in there. And so when we talk about reduction in exports for us, it's coming all out of the Hong Kong, China market. Well, we know that China is heavily invested into the Brazilian market. Brazilian is a high producer of corn and soy. What do we do with kind of excess corn and soy? Well, we feed it. We find additional value products. And putting that all together with kind of where corn market's at, we have the ability to, or they have the ability if they want to develop the feedlot industry a little bit more and compete directly with us on the high value market for premium beef to the world. That's not something that's going to happen this year or in maybe in 5 years, but 10 years if we continue in a certain climate, that we can essentially provide the opportunity for them where it makes economical sense for them to develop something like that out.
You follow that up by discussing returns to the cow and what that kind of looks like. Break down some of those tools and how we can really evaluate that moving forward.
Yeah, so if we're going to retain a heifer, and put on weight on her, we need to be calculating the value of gain, how much the market is willing to pay us both now and in the future to put on that additional weight by location, by animal type. Beefbasis.com is a great tool that I use frequently to kind of with producers to kind of show some of that. I think if we're thinking about kind of the value of that replacement heifer, something like a replacement calculator are really important. So we have the ability or projected average to make about $640 essentially per cow. That's high, but not as high in real dollars as we had in 2014. And the difference between high and low producers, there's quite a big range. And so even at high prices that we're experiencing now, there's going to be some producers, because of their cost structure, they're still not going to make money.